is looking at what could be the impact of El Nino. So while in the last webinar we had discussed uh, the impact of higher fertilizer prices and higher fuel prices on inflation and growth for India, it's also important now to see, because as the IMD has forecasted monsoon at 92% of long period average, we need to see what's the kind of impact previous years of lower rainfall has had. So if you look at these previous years of lower or weaker rainfall than average, if you see, since we have data since 1982, typically what we have seen is it's the kharif or the summer crops which get most affected compared to rabi crops, because we have seen, if you, for example, if you see whether in 2001, 1987, or even 2000, let's say 23, there have been times where rainfall has been weaker than normal, but rabi crops have been strong, which is typically winter crop, which also makes sense because these are not just dependent on summer rainfall, but also on reservoir capacity, on irrigation, overall soil moisture. So broadly, it's the kharif crops which continue to be most sensitive to any major change in rainfall. And does the change in rainfall affect every crop in the same way? Probably not. So as you can see, there have been times where rainfall has been very, very weak, but uh, the biggest impact that we have seen is happened in coarse cereal, pulses, oil seeds, etc. So, for example, if you look at 2015, where rainfall was 12.7% less than average, the impact on rice production was only 1% down. But if you look at the impact on oil seeds and pulses, or even coarse cereals, it was much more, because typically wheat and rice there is a buffer stock which is available with the government, and also if you look at the irrigation area under wheat and rice, it's also quite strong. So typically we don't see too much of an impact on wheat and rice, but the other food crops where irrigation is not very strong, we tend to see substantial price hikes, and that's something which policymakers will be watching very, very keenly. So typically, we talked about how lower than expected monsoon can affect kharif crops, and within kharif crops also it can affect pulses and coarse seeds and oil seeds. But if you look at the previous forecast of El Nino, it doesn't mean that just because El Nino is there, monsoon will be lower than normal. So this is a comparison of El Nino since 1982, whenever El Nino has happened. What is the kind of monsoon has happened, and what's the kind of El Nino forecast the IMD has given? So, for example, if you look at uh, you know 1997 to 2026 period, there was a period of very strong El Nino, where in 1997 the actual monsoon was almost 100%. So there were 3 periods, of course, of very strong El Nino where monsoon was 10% lower than average, but there was also a period of a normal monsoon. Similarly, if you see in the period of uh, you know 1991, El Nino was quite strong, but the monsoon was almost normal, which was 98% of its long period average. If you look at, for example, in 1994, again we had El Nino, but we had monsoon, which was at 114% of its long period average. Uh, and if you look at even in, for example, 2006, uh, El Nino was slightly weak. We saw two years of 2014 and 18 where monsoon was below normal, but we also saw 2006 where monsoon was quite normal. So it's very difficult to say just because El Nino is expected that monsoon will be lower than average. There have been years where monsoon has been quite strong and almost at its average. Secondly, it's the distribution of monsoon also which is important. So it's not just about whether monsoon is 90% or 95%. If the monsoon is well distributed regionally as well as seasonally, which is July, August, in the months, which is quite critical for sowing, then probably the impact on inflation should be relatively muted. So we talked about how El Nino, there have been variations where despite El Nino, the rainfall was quite normal. But the other thing which also matters for, domestic prices is also global food prices, which of course comes from how global oil prices are behaving and how global fertilizer prices are behaving. So as you can see the table on the left hand side, the years where rainfall has been lower, and let's say for example in 2000 where Brent oil price was high, as we can see sugar prices was quite high, which led to domestic inflation also being on the higher side. If you look at 2002, again, we saw very substantial price rise in cereal as well as oil price globally. So it's a global price also matters because in periods of deficit, typically governments want to import food grains from the rest of the world. And if again food grains in the rest of the world are highly priced, uh, it does affect the domestic price as well. And if you look at typically what has been the change between uh, seasons of deficient rains and non-deficient rains, typically if you see in terms of inflation, inflation tends to be about 80 basis higher in periods of deficient rainfall, and food inflation tends to be 120 basis uh, higher, so which implies broadly a 40 to 50 basis weighted average impact on inflation. So of course, if you look at rain-fed crops, like I talked about in the previous slide, typically we don't see an issue in wheat and rice because one, government is carrying huge buffer stock. Also, these crops tend to be irrigated. But if you see, look at rain-fed crops, they tend to have very, very high inflation in periods of deficit. So if you see periods since last 15 odd years, in case of deficient rains, the rain-fed crops have had an average inflation of 10% compared to just 5% in periods of non-deficient rain. So that's where the sensitivity would lie in terms of perishable, in terms of pulses, etc. But of course, these are supply side shocks. So we do expect to RBI to ignore the first round impact and really wait to see whether this food price shocks is translating into higher inflation expectation as well as higher wage increases, and that was something where probably would discomfort RBI. But as long as these prices do not lead to any pickup in inflation expectations, we think RBI is likely to stay put, at least in the near to medium term.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.